So hi everyone, and welcome to this discussion on the state of open banking in Australia. I'm Macnaughtan from Backbase. If you're not familiar with Backbase, we work with banks of all sizes right around the globe, helping them deliver digital experiences that their customers love. So we're almost exactly a year into the first phase of CDR since the Big Four banks went live. And next week is the phase 1 deadline for the remaining ADIs to come online, at least those who haven't negotiated an extension with the ACCC. Depending on your perspective, you may feel like we've made great progress in that year, although there are those, including some fintechs, that have a different view. In our discussion today, we're going to focus on open banking primarily from the point of view of banks. We're not going to be thinking so much about the obligations as data holders, but instead the opportunities and challenges that open banking presents for banks to help their customers with their financial well-being. To do that, we'll use a mix of some recent research from RFi, as well as some expert insights from our panelists. And so to get us started, Kate Wilson, who is Deputy General Manager with RFi for Australia and New Zealand, is going to share some insights from some recent research. Good morning, Kate.
Good morning. Thank you everyone for dialing in this morning. I'm just going to share my screen and thank you, Malcolm, for that introduction. The intent of, I guess, the first 5 minutes is really to take you through some of our recent research at RFi Group into the state of open banking in Australia. So we run, if you're not familiar with RFi Group, we're a market research firm focused exclusively on financial services, and we run a number of research programs around the world, including in Australia, which touch on different elements of banking and financial services. And we've been looking at open banking for a little while now. So I'll provide a bit of an update around what we're seeing just in terms of consumer sentiment around open banking, the extent to which customers are aware of open banking, whether they're interested in it. But as Malcolm mentioned, what we really also want to touch on today is the opportunity that's presented by open banking when it comes to supporting customers around financial well-being and supporting budgeting and their financial management. So I'll talk about that a little bit as well. Just to start off with a bit of an update around what we're seeing on open banking, we've decided to start tracking open banking from an awareness perspective. So every quarter, we're getting a read on the extent to which customers are aware of different terms. We've been tracking awareness of the term open banking for quite a while now. We're also tracking awareness of the term consumer data right. What we see in our research at the moment, we pick up about 20% of consumers who said, I've heard that term open banking before. We pick up 15% of consumers who say, I've heard the term consumer data right before. That hasn't changed too significantly recently. So we've seen numbers around those numbers probably for the last year or so. There is a bit of an age skew to this. So younger consumers are more likely to indicate that they've heard those terms. But I think importantly here, this is just awareness of a term does not necessarily mean that there is a high level of understanding of what these terms means. And actually, when you start to dig into this, the extent to which customers actually understand what open banking means is quite low. So we see a very small proportion of consumers who understand what open banking means, either in terms of being able to correctly identify what open banking is in terms of just data sharing at a high level, but an even small proportion who really understand the mechanics behind it or the mechanisms behind it, and the idea that it's sharing data in order to access different services. So awareness is kind of there. There is a proportion of the market who've heard those terms before, but I think importantly, awareness does not equal understanding. We do see very low rates of understanding in the market. I'll talk about that a little bit more as we go through and whether or not that's important. I think that there is a key point here around how you build customer trust. Having customers understanding how open banking CDR works is definitely important to building trust, but probably more importantly than that, having really clear benefits for customers, I think is really the key in terms of how we get open banking or customers adopting open banking services. We also have started to track consumer uptake of open banking services. And what we've decided to do is to really focus in on aggregation services. So are you using any type of app, any type of service that allows you to view and all of your bank accounts across multiple providers in one view? Sort of the easiest way for a customer to think about what open banking is. It's the easiest way for us to identify it. We are starting to pick up consumers using these types of services. Again, very small proportion, so only 2% said that they've used one of those types of services. And if you look at the right-hand side there, the type of services we pick up, there's a bit of a mix in there in terms of using CDR or using screen scraping, even within those services. Frollo, for example, of course, using both CDR and screen scraping. When we look at those types of services, there is a bit of a theme coming through there around customers using it, not just to view their accounts, but more so to understand what is happening in terms of their banking. So already we're starting to see that use case coming through around using open banking, using aggregation services to manage my finances. Are customers interested in open banking is the other point to this. Is one thing to have awareness, it's one thing to have understanding, but is there interest in actually, one, sharing data, but using and utilizing the services that are available under open banking? At a very high level, when we look at the extent to which consumers are interested in giving their consent to share their data under either open banking or under CDR, and both of those we've described at a very high level for consumers, the proportion of customers who are very interested or who are willing to do that at the moment is relatively low. We see about 10% of consumers saying, yes, I'd be comfortable with sharing my data in order to access the benefits of open banking or of CDR. That number also really hasn't moved in the last couple of years. It's remained at around 10% pretty consistently over time. There is, however, a significantly greater proportion of customers who are open to understanding more. So we see about 50% when we're talking about CDR, and CDR, I should say, we do pose as sort of being regulation, 36% for open banking. But again, a relatively sizable proportion of the population who say, I'm not really there in terms of sharing my data, but I would like to know more. And if there was the right proposition, potentially that would change my mind. Which brings me on to propositions and use cases for open banking. I think there is a key one around helping customers with financial management. As I said, that aggregation service sort of already does that to an extent, helping customers to view all of their accounts across providers. There are, of course, lots of other use cases for open banking, but I'll focus mostly on this one in the last few slides here. The first point I want to make, what I showed you on that previous slide, the extent to which consumers are willing to share their data in order to enable high-level benefits of open banking or CDR. So I'm willing to share my data in return for better services and better products and recommendations and things like that. That was relatively low. Once we start to go into specific use cases, we see a completely different story. So across these different use cases that we've tested here, and these are sort of the general ones that get spoken about in terms of CDR, you get closer to 50% of consumers who say, this is actually something that's very appealing to me, and I would be willing to share my data in order to access these services. So if we think about trust and what consumers are willing to do, the hesitancy that customers have around sharing their data, if that key benefit is there, if it's demonstrated to customers what they'll get out of sharing their data, that really shifts the market or changes the game in terms of what customers are willing to do and the extent to which they are willing to share their data. So I think having really clear benefits for customers, having really good services is going to be really key in terms of driving uptake of open banking, and probably more so than actually whether we do see widespread awareness of the term or if we see widespread understanding of the term. Having that really clear benefit is going to be what's key to driving that uptake. But to wrap up really in terms of what we're seeing around PFM and budgeting and financial management, what we've been looking at, and this again quite consistently over time, we do see consumers having a real pain point or a real customer problem around managing their money, in particular younger customers. So millennials, Gen Z, even into the sort of early parts of Gen X, there is a significant proportion of customers there who consider tracking their finances to be difficult. And for a wide range of reasons. Some of it is, I just think it's boring, I don't want to do it. Some of it is, I'm doing things in so many different ways. I'm using so many different payment methods. I'm using so many different bank accounts. I just find it hard to keep track. Some of it is, I just don't feel like I have the resources, or I simply don't know how to budget. So a key problem that persists for customers, in particular for younger customers, and a range of things that they're really looking for in terms of that support around budgeting, managing their money better. The other key thing here is we are starting to see customers ask for PFM functionality from their bank. This is a verbatim question where we said to customers, what would you like from your bank, from your banking app, in order to help you manage your money better? when we ask a question like this, we always expect rates, fees, incentives to come through. So we would always expect customers to say, I want to get a higher rate on my savings. I would like my bank to give me money. So we kind of expect that coming through, and that's what you see on the left-hand side there. But I think importantly, especially for that younger customer group, they're now starting to say, I want budgeting tools. And this is despite the fact that the budgeting tools that are in the market at the moment don't generally have very high rates of awareness, don't have very high rates of use. So even without customers starting to use these products in large quantities, customers are starting to say, I want that type of functionality. I want charts that show my spending. I want insights in how I'm spending. I want help to save more. So this, I think, is where there really is a key opportunity for open banking, in particular amongst those younger customers who are struggling with this to a greater extent. There is a clear use case here. There is a clear benefit to customers. And I think aggregation services just on their own probably help to get part of the way, or just that visibility of all accounts gets part of the way to helping customers with this point. But if we can go further with open banking, if we go further with CDR, this is a key proposition where customers are going to see value, and that will change their perceptions around whether or not they're comfortable with sharing their data. Just wrapping up those key points there before we jump into the panel. We do see relatively low awareness of open banking. Understanding the benefits, importantly, is even lower. So a very small proportion of consumers are actually able to understand what open banking, what CDR means for them, or how it would work in practice. At a high level, consumers aren't really that comfortable with sharing their data, just if we're talking about sort of broad benefits. If they do see specific use cases, if they can understand how sharing their data benefits them, that changes things. Customers are then a lot more willing to share their data in order to access those types of services. I think there's always a point here as well around, if you ask someone directly, would you want to share your data? They're going to say no. But if there is a value exchange, and we see this with something like Facebook all the time, if they see the value that they get by ticking a box, that does change their perception, does make them more open to sharing their data in that way. And then finally, PFM budgeting, helping customers manage their money, is a clear use case, I think, for open banking. It resonates with younger customers in particular who do struggle with managing their finances and are already beginning to ask for these types of tools without necessarily seeing them in action, without necessarily seeing, or at least in a widespread way, seeing how these tools will help them. They're already starting to ask for these types of features. So I think those types of tools which open banking can really enhance, that is where there's a clear use case, especially for younger customers, and will also help to solve that customer pain point around financial management, giving customers more control of their money. Hopefully that sets the scene well for the panel. I'll hand back to Malcolm.
Yeah, thanks, Kate. Some really interesting insights there. I found that the last chart you had with the youngest age group, only 13% kind of interested in the bank helping them with interest rates and lower fees. Right, that'd be interesting to unpack at some point. I'm sure someone's looking at that and going, opportunity.
Absolutely. Younger customers very used to lower interest rate environment as well. They're looking for other ways the banks can help them.
Great background. So let's introduce our other guests today. And so we might start with, we've got Albert Naffah, who is General Manager of Payments Development and Strategy at CBA. And I think we just need Albert's video. So there you are. Morning, Albert.
Morning, Malcolm. Good to be with you.
Thanks for joining. And we also have Erik Fenna, who is General Manager of Technology Transformation at PNN Bank. G'day, Erik.
Hi, guys. Thanks, Malcolm. Great presentation there, Kate. Thank you.
So maybe before we jump into the discussion, let's just do some slightly more detailed intros. Can I ask each of you just to give us a bit more of detail on your background, and if there's any particular interest or experience you've got, open banking or CDR, let's be interesting to hear that.
Sure. Should I go first, Malcolm?
Yeah.
So I look after both payments and what we call the data economy at the Commonwealth Bank. And we put them together because there is significant synergies between, I guess, the two areas, and payments are just really the movement of data around anyway. Part of my accountabilities over the last year or so have been to deliver the CDR, both compliance and strategic opportunities at CBA. It's been, as you can imagine, a fairly significant piece of work, building new technology capabilities, getting new compliance and policy frameworks in place. building new strategic capability around consent and entitlements management, as well as obviously looking at how we might be able to ingest RFi data to deliver on some of the benefits that Kate outlined so well just before. And we've gone live obviously with a light touch PFM at the moment. So it's good to see that strategy is validated by the research, that it is considered valuable to our younger customers.
Erik?
So PNN Bank and the merged entity with BCU, we're quite a small bank, and we try to punch above our weight with a lot of stuff. And one of the things that we're seeing here is very much an orientation around digital channels and digital engagement with our customers. We're quite aware of the relatively low, exposure to financial understanding of our customers. And we're focusing very strongly on how we can engage with them and engage with business partners in order to lift the capability of our customers to understand and manage their own finances, and simultaneously to work with vendor partners to look at models where we can get a mutual benefit. And interestingly, wasn't rated particularly highly on Kate's chart, but where you look at the ability to, say, process a loan application using that kind of data, which benefits the bank, but it also benefits the consumer by having faster processing, more accurate processing time.
Mm. And are you finding, is that opportunity and that need sort of reflected in your own voice of the customer research, or is it, what's kind of motivated that?
It really, I think if you were to dig deeper into the information that Kate has, and RFi, I'm sure, does a lot of analysis on it, you're going to find that people, when prompted, don't know the answers to the questions that you're asking, but unprompted don't even know the questions that you're asking. So they're really a case where it's an opportunity to provide education, in the sort of most general sense of exposure to sort of opportunity, as well as then providing that service. More of a case of take the budgeting question. I mean, a lot of people just wouldn't even think of budgeting. I know when I was in that age group, that 18 to 24 age group, there's no concept of budgeting. I just spent all my money. And you don't really think about it in that sense. But if presented with an opportunity to say, here's a way you could manage your money, back then in the day, it was a hard slog to do budgeting. Even 10 years ago, it's a tough gig to do budgeting. And so if you can provide tools that then make that kind of thing easy and expose people to their income and expense flow and expense categorization, and then bucketing for setting aside money for different savings, then I think you can bring the customer on a journey with you.
Yeah, interesting. So Albert, I mean, you guys have obviously been live for a year, sharing your data, and as you mentioned, just getting started as a recipient as well. So, quite an early move there. And I think when Matt Common announced that strategy, he linked it really strongly to the opportunity to help your customers with their financial wellness. So interested if you could share a little bit more into, how the bank was thinking about that, how you see that opportunity, and, a little more detail on what you've done so far.
Yeah, no, you're right. So, core to the bank's mission is helping customers with their financial well-being, consumers and businesses. And we've been looking at ways and delivering different ways of doing that, since our creation more than 100 years ago. But more recently, we've announced and delivered things like Benefits Finder that help customers find money that they might have out there in the ecosystem, unclaimed super or government benefits or other things like that, delivered through the CommBank app. So it's only natural that we would start with a simple account balance aggregator sort of value proposition in the CommBank app. We know particularly our younger customers are often logging into their app 10 times a day. And I imagine they're probably doing that across multiple banks if they've got, different banking arrangements. And when we did our own research, it was very similar to what Kate just presented, that they saw value in having all of their financial arrangements in one place. And then ideally, what we'll obviously also do, that's quite a rudimentary offering, is we'll start using, with their permission and they're obviously the right consent, the transaction data from any OFI arrangements that they have to feed into those other services that we offer them connected to their CommBank accounts, whether it be around helping them track their spend by the different categories, as sort of Erik just talked about, or extending some of the benefits finder type arrangements, again, with a richer amount of data. And you can see, again, as Erik touched upon, us being able to, with the right consents, and obviously it goes without saying, making it easier for them to, open up new loan accounts or other financial services products without having to go through the currently fairly tedious process of sending us scans of statements or their other financial arrangements with other OFI. So it's really, the early opportunity is just about doing what they do today, making it much simpler, removing some of the friction, removing some of the time cost associated with it, so that we become a much more easier to deal with partner. And then I think over time you can extend it beyond existing use cases.
So CBA has been doing some work for a while on measuring financial wellness, and you've got a collaboration with a specialist in that space. Have you thought about yet, how you might be able to measure that directly with the data that you have, just to see how some of these initiatives are having an impact?
Obviously, at the moment, there's going to be an opportunity to see if there are any correlations between some of the offerings and that we're putting into market or offering our customers and changes in those wellbeing scores. And obviously, there's a bunch of macro factors, right, that probably drive how people feel a lot more than some of the micro factors that we can influence. But certainly we have, we sample with our customers when we deliver certain solutions to them, whether they feel that is contributing to, helping, them get that sort of their sense of financial well-being. And certainly we are seeing some positive reaction to those things, particularly, as I mentioned before, benefits finder. But then, like I said, the macro factors play a big role, and how we respond to those macro factors can also be really helpful. So through COVID, obviously we were able to offer things like repayment deferrals and holidays, and extend to our business customers, cash flow support, as their businesses were impacted by lockdowns and the like. So obviously the macro factors are having a huge dampening impact on how they feel about their financial well-being, but we're able to hopefully mitigate that or moderate that through some of the other services that we're able to offer. And I would expect that we can extend those offerings with having greater visibility of their financial position through ingestion of OFI data. So one of the things that we've been doing, obviously, is we only in the last year we've turned on sort of quick business loans, digital, entirely digital, authorized and funded literally within minutes. But we've had to offer that to customers that we have a good visibility of their financial position. And so we've said, you need to have a transaction account, a business transaction account with us for at least 12 months. CDR will allow us to open that up to anyone who's got a business transaction account with any of the participating banks in Australia, as long as they consent, sharing that data with us. We'll be able to get the same view of them, and so be able to offer them those services as well.
Yeah, interesting. Coming back to you, Erik. So, mutuals have to make prudent technology investments, and there's probably, a number of your peers also thinking about this. From your perspective, do you see open banking as something where, there's meaningful advantage to be gained by moving early, versus, perhaps kind of waiting and seeing how some of these early propositions land before making, significant investment?
Yeah, thanks. There's two aspects to that, I guess. The first is whether we would like to move quickly, which we do, and the second is how to move quickly when as you say, we're quite a small institution, and most of the mutuals are sitting in a similar kind of boat where we're highly dependent on vendor partners, whether core banking, internet banking, fintechs, and whatnot, on the ability to deliver these services. So we looked at for example, statistics out of the UK where upwards of 30% of millennials say they would consider leaving their bank if they don't provide them with financial management tools. So that is not a position that we want to be in. And I don't think it's a position any bank wants to be in, from whether it's us or Combank or anywhere in between. So we believe fairly firmly that we want to be moving as quickly as we reasonably can. We are, as I said, highly dependent on vendor partners, and we're working through a number of those agreements and relationships now. Key to a lot of what we want to do is integrating capability and services from different partners, including into and out of our core banking platform. And a lot of that then is dependent on APIs. So we're doing a lot of work on the technology side to open up the core banking system for account information and whatnot through this API capability, such that we can then integrate vendor partner software with our own operational software to be able to deliver this seamless service. So we look at the increasing rate, for example, of the use of the mobile phone for banking. The internet banking usage has been fairly steady for a long time, but we're sitting in a position where internet banking proportionally is declining compared to mobile app. We're now in a position where we have a higher percentage of users that are exclusively mobile app users versus exclusively internet banking users, and a surprisingly small percentage of people that use both. It's quite surprising for me to see. I use both, but quite surprising for me to see how much greater it is people who use their mobile app exclusively. So if we want to provide open banking services through a vendor partner, we have to integrate it into the mobile app experience. And that's really where a lot of our emphasis is right now, to deliver that capability through the phone.
You're sort of doing a lot of the preparatory work so that you can then start to respond to some of these opportunities and needs. Yeah,
exactly. So we're live with PRD. Obviously, everyone's live with the product reference data. We're not live with the delivery of the financial transaction data. I mean, it's not due for another, week and a bit, for the smaller institutions like ourselves.
Busy and weekend ahead for someone like that.
I hope so. And then after that, of course, we need to be to get accredited to be a data recipient in order to then process and use that information that comes in via the open banking channels.
Yeah. So Kate, coming back to some of the research that you shared, there was that clear work that we have to do in terms of awareness and education. And part of that, is, I think you also mentioned the trust, feeling comfortable with that. So we're in this situation where we've got access to some data from some banks. It'll be a while before we've got complete coverage. Some providers, are using a blend of screen scraping and CDR just to cover that, and may need that for a while. Do you have a view on, is that helpful, or is there a risk there that these different modes of data sharing and debates about the relative security of them, does that risk kind of creating some confusion in consumers' minds and maybe undermining what we need to achieve?
Yeah, it's a really good question. I think it's tricky to answer because I think consumers really don't know the difference between screen scraping and CDR, and the proportion of consumers who are using either is still quite low. So whether a customer understands what they're doing when they're using something like screen scraping, how that would compare to CDR. I think that is one of the key education pieces that we still need to get to. So making sure customers understand what they're doing, what they're sharing, what benefits they get back. I think the trust is important. I'm a user of Frollo, and when you go through the Frollo experience using CDR, it does feel very secure. And I think some of that is about the way they're communicating to customers rather than necessarily being screen scraping versus CDR. It's giving customers that sense of this is an official process. You have control over what you're sharing. You have the ability to revoke your consent. So I think it's more about making sure customers feel in control of that process, whether it's screen scraping or whether it's CDR, more so than anything else. But we know if you lose customer trust, it's really, really hard to regain. I think Facebook is the prime example of that. We first started doing research in trust in different providers back in around the time of Cambridge Analytica, and Facebook's level of trust has not come back, has not shifted since then. So once you lose customer trust, and with something like data sharing, it's incredibly important, especially in banking. If you lose that customer trust, if customers feel like they're not getting that sense of security from you, it's really hard to regain.
Makes sense. A slightly different question for you. So obviously, one of the goals when we set out on this path was to increase competition and improve outcomes for customers. And so in banking, one that could look like recommendation sites, and especially with action initiation, just constantly switching customers, right, to different products to get the sharpest rates. But we've also seen, after the low of the Royal Commission, several bits of research I've seen show trust in banks steadily growing since then. So as we move into this kind of open banking era, do you think for banks there's an opportunity to build sort of enduring relationships that are about more than just the best rate of the day?
Absolutely. Yeah, we've seen that in our data as well. The major banks obviously took a hit during the Royal Commission, but we've seen that really recovering through the pandemic, and we're now seeing trust in the majors the highest it's been in years. So that trust has been won back from the direct impact of the Royal Commission. I guess in terms of that sort of price switching, there's always going to be a proportion of customers who are gaming the system, who are switching constantly. That idea of having a customer who's constantly moved from product to product based on the best price, I really wonder how many customers would like that. I personally would probably hate that, though I understand sort of why it seems like a good idea for a customer to be constantly getting the best rate. I think customers still want choice, and I think they want to have agency in that choice. I don't think that there is a large proportion of customers who are comfortable with just having an algorithm deciding who their bank products are held with and having that constantly shift and change. What I would say though is we are seeing really significant shifts around customer loyalty. So we're seeing customers becoming less loyal to their main bank, and that means generally less loyal to the Big Four, given how much of main bank share is still held by the Big Four. So we're seeing customers increasingly looking at newer providers. We're seeing neobanks like Up doing really well at capturing younger customers. We're seeing customers increasingly multi-banks as well. So customers are not showing that same sense of loyalty as what we've seen in the past. I don't think that means everything is about price and that price is the only way to win customers. I think what customers are really looking for is competitive pricing, but also really good features, really good innovative solutions. Digital is obviously really important. What I mentioned before around sort of PFM and budgeting tools that younger customers are looking for. Some of that also just goes to having really good banking apps that really meet customer needs. And I think open banking, if anything, means that we're going to see more third-party providers going into that space and creating those really smart customer solutions. So I think that's maybe where the competition is, rather than just being on price. Is it banks who are going to get there first in creating those really great solutions, or is it going to be third-party providers? And how does that sort of shift the narrative, and how does that impact on customers' relationships?
So Erik, particularly with mutuals, that relationship with members, right, is typically members bank with a mutual for a reason, right? And that message about all the profits being focused back on the benefit of the members resonates with that base. Do you see this kind of open banking era contributing further to that, or changing that dynamic? Are you thinking about how to reinforce that kind of relationship?
We haven't landed yet on how we're going to promote the services that we do provide. It's obviously too early to do so now. But I think the key for us is that the reason why we're investing in open banking and these various financial management, financial literacy, financial empowerment kind of tools is for their benefit. It's not for those ones. Those tools are not for our benefit. They are for our customers' benefit. And they're being provided for, I guess, the right reasons. We're providing it because we feel it is best for them to be able to be empowered and to be able to have agency over their own funds. We try not to be, well, we can't be a price leader in most situations. And when we talk price, we're typically talking lending or term deposits. Term deposits are interesting. They're very, very fungible. People move their money around all the time, in and out of our bank, in and out of any other bank, wherever the rates are the best. Lending is obviously a lot more complicated because you got to go through the application process. I would foresee at some point in the future, not in the next year, but certainly at some point in the not too distant future, that it becomes just as easy to move a loan around as it would be to move a term deposit around. Obviously, fundamentally different concept from the bank's perspective. But where we look at this kind of open information with not just open banking, but open, finance, when you start to get service providers like the energy providers and the telcos and whatnot involved in the delivery of this information, and you combine that with comprehensive credit reporting, and you combine it with advanced analytics on not just the last 3 months of statements, but the last 3 years of statements from every bank that you've ever dealt with and from every product and service that you've ever got, we will start to be building a much more comprehensive view of the customer's financial situation, and certainly from looking backwards, but ideally then with AI tools, then looking forwards and going, predictively, is this a customer that we trust? And at that point, I think we're providing valuable services to the customer, where we can say, yes, bring us your loan, because we will provide you with a better loan, and ideally a better digital experience through the app or any other digital channel or any other channel that we're working on. So it's very much a front of mind thing for us, how the customer sees us, without, of course, ignoring their prudential responsibility to stay in the business and be, profitable to some degree.
Yeah. Albert, coming back to you, you seem to be making a habit talking publicly about open banking. I saw, the Open Banking Summit a couple of weeks ago, and one of the things you highlighted there in answering one of the questions was ecosystems, and how you see that as being an important part of CBA's strategy here. Can you shed a bit more light, on the kinds of partnerships and the thinking behind that?
Yeah, sure. And I think it's been touched on as well by Kate and Erik. This is about bringing together different components of both things that we offer, but things that partners can offer to really differentiate our offering in the marketplace. So it's not just about price. And I think price will become less and less important over time, and because there'll be so many different things that we're able to differentiate on that will be of value to a customer. But CBA talks about ecosystems because we do bank 11 million Australian consumers, and let's say round up to 1 million businesses. So we already have a large ecosystem ourselves, and it's really about connecting those consumers and those businesses across the different their individual needs in a better way than we have in the past. And you see the businesses that have been really successful in the digital age, whether they're locals like Afterpay or international players like the big tech platforms. What they've done, they've built those ecosystems, and they've stitched together different capabilities again, that they either have manufactured themselves or they've said someone else can manufacture that better than us, and we'll serve them up in our ecosystem, on our platform, for the benefit of our customers. We've made announcements in recent times in the health space where we want to help patients from the very beginning of their need. They want to search for a dentist or a physio or a doctor, so they can do that through a directory. They book the appointment. The payment, which often is the most painful part of the experience, more painful than having a tooth extracted, becomes invisible and digital, and that's painful. But by the way, for everyone, for the patient and the provider. So we remove the pain associated by that, and then there's a platform and that ecosystem for that ongoing interaction between the patient and their provider. It's time for your 6 monthly checkup, or there's a special if you book in for that massage, this week, for example. So there's no reason for them to leave our ecosystem, from the very beginning to the very end and repeat. We can serve them. And similarly, we've made recent announcements in the shopping space, and even today, if you read the Fin in the business banking space around invoice financing and partnering with Waddle and Xero in that space. So the old days of we can build it all ourselves and we're a product house and we're sort of thinking around individual needs, I think are gone, and competition's driving that. And things like CDR will further sort of drive that change. And I think that's a great outcome for Australian consumers and businesses.
Mm. And is there as you think about potential areas where you could partner, are you thinking about how painful a particular journey is for a customer, and therefore, your ability to put the pieces together? Or are you thinking also from a lens of stickiness, or where CBA's got some unique assets that you can pull together? What sort of lens do you look at those potential ecosystem areas through?
All those things, Malcolm. Obviously, there needs to be a pain point that we think we can address, and that we're entitled to address. We do our own research and we sort of test different concepts, and sometimes customers say, we will never buy that from you, for whatever reason. Kate's point around increasing trust is right. We are seeing it. We're seeing it in our NPS scores, record highs. In recent weeks. So we're winning back the trust of our customers, and we are highly trusted, but we're not always going to be where they want to buy a particular product or service or solution from. So are we entitled to play in that space? And we test that with our customers. Do we have any native capability that we can bring, or does it make sense for us to partner? Will it enhance our attractiveness for customers so that we can obviously extend our relationship with them, make them more profitable? All those things are in consideration, but we also have to choose. We know we can't play in everywhere, and so often the hardest conversations around what are we stopping or what are we not pursuing if we're going to take on this new opportunity.
Yeah, makes sense. I should just say to those of you who've joined us, if you have some questions you'd like to ask, I'm keeping an eye on the Q&A list, so feel free to add your questions there, and we'll pick those up in the time we have remaining. Coming back to you, Erik, so there's been a little bit of a mention of SMEs as well in the discussion so far, and PNN is maybe a little bit unique in the mutual space in having a meaningful business book. Do you see any differences in terms of the need or the opportunity when you look at that segment of your customer base compared to consumer?
Particularly in the context of lending, yes. Probably a little bit less so in terms of transactional banking, because a small business would be expected to have their accounting platform doing a lot of that work for them. But where we look at lending and the ability to access funds, then we're absolutely seeing a position where more information provides us with the ability to do a better job of assessing a customer, small business customer, for suitability for them of whatever type. I'm not sure how much of that is going to fit into open banking, because I really believe that a lot of that tie-in is through their accounting information. Where you look at things like company loans with directors as guarantors, you start to get into that territory that says, wait a second, that the personal side of that information is not in the accounting platform. Then you can start to aggregate and get a sort of a whole of the environment picture over a small business, with both the business itself and the people who are involved in the business. You can start to understand how valuable, let's say, a guarantee would be from a particular director. Small business banking any business banking is a tough world to get into, no question about it. And we certainly have a not insignificant exposure through both the West Coast and the East Coast. So we're certainly looking forward to opportunities to assist the customers with better access to that information.
Makes sense. Kate, coming back to you, we've talked a little bit about, the price element of this, and RFi thinks a lot about customer segments and so on. Do you think marketing teams and banks will, be thinking more about how open banking influences that, maybe crystallizing sort of switches versus stayers and factoring that into how they think about segmenting customer bases?
Yeah, thinking about those, I'd call them sort of gamers, those people who move around a lot. I think there's always a point around people who are price sensitive and they will move full price. So there is a segment of the market who will come in because you're offering the best price on a savings account or on a mortgage. But they're the same customers who are likely to switch again if they see another price elsewhere. So I think perhaps having better visibility of who those customers are, maybe that means that banks can spend more time on retention strategies for customers who are perhaps more likely to stay in, to become longer term customers. I think we don't necessarily want to always be attracting those customers who are just going to switch out again. So I think maybe that's what we'll start to see more of in open banking. I think as well, there is just a point around that Erik and Albert both mentioned, creating real customer value is how you keep customers loyal. Customers, especially customers who've been with their banks for a long time, they want that recognition of their loyalty. They do want to, sometimes it is price, sometimes they want a better price than a newer customer, and that definitely plays into customers thinking, especially with mortgages and back book, front book pricing. But I think a lot of the time customers just really want to be seen. So I've stayed loyal to you, I've demonstrated my loyalty to you as a customer, and I want you to display that back as a bank. So I think that's probably where I would be suggesting there's opportunity to really reach those customers, to meet their needs, to provide the right solutions to them, and they're the customers who you want to keep, that are loyal to you, and you want them to remain loyal to you longer term.
Yeah.
To add to that, Malcolm, I think Kate touched on a really good point. Customers want to be identified as different, and so we all talk about this, but that sort of personalisation is so important, and I think CDR does help us with that. The more we know about a customer, the more personalised and targeted and relevant we can be for them. So that is, I think, one of the big sort of opportunities for us here. How can we be more personalised using the rich analytics and the array of value propositions that we have, so the customer believes that we understand them and we're delivering something that is right for them. And CDR plays a very, very important role, I think, going forward.
Personalised offers are one of those things that always get really mixed results in our surveys, because customers assume a personalised offer is going to be what they're used to getting at the moment, which is a vague product which may somewhat meet their needs. But I think once you start to really deliver, here's a product that really does meet a customer problem, that really does meet your specific needs, and with CDR meaning that you have a better understanding of who that customer is and what their needs are, rather than just the siloed view that you get at the moment, then that means that personalization becomes really possible. And as you said, I think customers really value that.
The personalization is something we've been talking about for quite a while, though, in digital banking, right? So I guess a question for you, Albert. I mean, you guys have some experience in that space, obviously gaining more experience now with this. Does this require an uplift in the technology capabilities of the bank to really deliver on this?
Oh, absolutely. And I think Erik touched on some of that before. What CDR will do, and not just CDR, there are a bunch of initiatives that are sort of happening even outside of the regulatory space, is liberating data. So once upon a time, the competitive advantage was in the data that you held, from your existing customers. That's no longer the competitive advantage. It's how you use it. I think Malcolm, you referred to another forum I was at recently. It sort of talked about, like, you could be the Venezuela of data. You can have all the data in the world, but if you don't have the right sort of mechanisms in place to exploit it, then it's useless to you. And so having those analytics capabilities, the AI capabilities and machine learning, and then the individuals, the people, the data scientists, or the mindset of not just the data scientists, but the whole business to understand the value of data and how they can use it in building better value propositions and serving our customers. Like, that is fundamental. And that's an ongoing battle that we have around uplifting that capability, both the technology and the skill set of our people. And that's, I think, where the real race is at the moment in uplifting that capability.
Yeah. And any thoughts on that from your perspective, Erik? I guess it sounds a little bit expensive, some of this, right? But
I wish I had Albert's deep pockets. No, that really goes to the importance for us of partnering with vendors, fintechs and whatnot, in order to access and deliver those capabilities, because we're not in a position where we can hire 1,000 data scientists or 1,000 programmers to do this kind of work for us. And so we're highly dependent then on those relationships. And more than that, from a sort of a technical perspective, the ability to share data out and to share data, get data back in. When you look at data sovereignty and security issues, it's a lot easier when it's all in-house. Not to say that it's easy, but where we're talking about partnering arrangements, then those other factors come into play as well. And so we then need to build quite a secure ecosystem that incorporates partners outside the banking, our banking system, and start to get those benefits, being able to deliver to our customers from, in effect, from the outside to the inside.
Mm. So I noticed we've got a few questions coming in, and we're getting close to the end of our time, so we might pick up a couple of those. So one of them is a question for any of the panelists. Do you think Australian banking customers will engage with open banking quicker than UK banking customers? I'm wondering, Kate, given RFi's kind of coverage, do you have a view on, do you want to take that one?
Sure, it's a really good question. I'm not sure. I think yes, actually. So I think given, not necessarily because there's a difference in an Australian customer versus a UK customer, but I think more so because Australian banks have had kind of a head start based on the fact that the UK went first. They've had the ability to sort of look at what's working there, what isn't working, probably creating more tailored solutions or solutions which maybe make use of that data a little bit better. So I think the initial use cases that we see in terms of open banking in Australia will probably be more aligned to what customers are looking for than what we've seen in the UK. So I think in that regard, we'll probably see customers starting to use open banking pretty quickly. Just on the aggregation piece as well, both Australia and the UK have customer bases that are highly multi-bank. So that even just that aggregation piece should make sense for both an Australian customer and a UK customer. But yeah, I wouldn't be surprised if we do see pretty quick adoption in Australia. And actually the other point is Australians are really quick to adopt new technology in general. We see really high rates of digital banking in Australia. Contactless took off here really quickly compared to the UK. Even mobile payments have taken off quite quickly in Australia compared to other markets. The UK, in London, mobile payments took off quickly, but not so much the rest of the country. So I think Australians are a sort of an innovative bunch, and we do like new technology and do like to try new technology. So that's probably my sense in terms of what we'll see. But yeah, it's a tricky question to answer.
Mm-hmm. So the race is on. I guess people will continue to make comparisons, right, between markets.
I think what's important, and sort of Kate touched on this in her earlier presentation or discussion, is maintaining the trust in the system. We touched on screen scraping. I think screen scraping has the potential to erode trust in open banking because, as Kate mentioned, some of the experiences look very similar, whether the data recipient is leveraging screen scraping or open banking. Screen scraping can be used for good stuff, absolutely, and it is, but it can also be an experience that looks and feels the same as some of the malicious sort of use cases. And so I think we need to find a way, like they have in the UK, of phasing out screen scraping as CDR and open banking becomes more widely available. So we can, with confidence, say to our customers, this is safe. When you have this sort of experience, don't be afraid, it will deliver value to you. Because at the moment, we can't do that consistently, knowing that there are loads of screen scrapers out there and others who are taking advantage of that sort of technology for not so good purposes.
About there's some who are thinking about the counter arguments, but we rehearsed those pretty well at that previous event, so we'll skip that for today. So looking at the clock, we're getting close to the end of our time. So maybe a last question for each of you. And kind of in this mode of comparing different jurisdictions, right? I think there's a view that the Australian regime is really quite progressive. This broader view of this across the whole economy. So I'm interested, and maybe I'll start with you, Albert. Do you see some benefits to a bank, operating within this more progressive regime?
Do I see benefits?
Yeah.
Yeah. Look, absolutely. We see significant benefits, and I think at least for the incumbents, I see actually tremendous value. Obviously, this was initially introduced to disrupt the incumbents and create easier passages for fintechs and new entrants into the market, which it will, and that's a great thing. But the incumbents already have, as we've been talking about, rich digital offerings and products. And this just opens up markets and remove friction from acquiring new customers. So I think there's tremendous value to participate both as a data holder, where you can work with partners, and as well as a data recipient. We're embracing it, as you can tell. That's why we do it safely. We want to do it in a sustainable way, building strategic capability that can be leveraged in multiple ways, and that is expensive, even with CBA's deep pockets, and takes time. And I think that's been part of the journey of sort of educating all the stakeholders, particularly our friends in government, around the challenges of doing it safely, but absolutely hugely beneficial.
And Erik, from PNN's point of view, this kind of broader cross-industry approach that we have here in Australia, do you see some benefits to PNN with that?
I think the importance to any institution is going to be visible if you can move quickly. I think that if a bank doesn't move with a reasonable pace for integrating these new capabilities and services for the customer and for their own back office processing, then you're going to be left in a position where the customers that are willing to move and wish to move will move, and then you'll find that products and services won't be priced at a competitive way. So it really is a case where I think everyone who wants to stay in the business has to be on these services. And so it's, in some respect, it's almost a defensive play to say so, a bit like positive credit reporting, a comprehensive credit reporting, that you just have to be in it to play. But we see the value then on top of that to our customers and to ourselves from back office processing perspective, and the ability to really engage more deeply with our customers and build a stronger, better, deeper relationship with those customers and with new customers that come on board for the services that we offer. Going to one of the questions that was on the Q&A about what it takes to increase the awareness, and it sort of goes to the first question as well about the UK versus Australian experience. I think it's going to be instrumental for all of us in promoting these capabilities to be able to push forward to the customer what the value is to them. I think if we say, hey, we have open banking, everyone will go, and But if we say, we can help you with this management of your finance, we can help you understand money better, we can help you get better products and services, we can help you integrate your whole economic environment of your other products and services outside of banking, then they will see that value and then they will come on board.
Makes sense. So look, we've reached the end of our time. And so just wrapping up, I guess we've got 1 year behind us. It looks like the year that's ahead of us is going to be very exciting, with all the rest of the ADIs coming online, and no doubt many recipients getting accredited and launching new propositions. So, Kate, hopefully if we get the chance to do this again in a year's time, we might see in your charts, a meaningful uplift in the awareness, and perhaps even some signs that consumers taking advantage of open banking enabled propositions are feeling better about their money, right? So hopefully. Anyway, let me just wrap up by saying a very big thanks to each of you, Albert, Erik, and Kate, for your insights. And to those of you who've joined us for this session, I hope you found it interesting, and I hope you've been able to take away some useful insights from our expert guests. Thanks, everyone. Bye for now.
Thank you. Bye.